You can be right most of the time and still lose money trading. And most people never figure out why. It's not their strategy, it's not the market manipulation, it's their risk management. In this video, I'm going to break down the exact system I use to stay consistent, protect my account, and make money over time trading stocks. The system I use isn't just theory. It's the framework that separates profitable traders from struggling traders. Once you understand you don't need to win every single trade to be profitable, hell, you don't even have to win 50% of the time to be profitable. You just need to learn how to have math on your side, and that's going to be achieved through risk management. So let's start with the foundation. I have 3 core rules that I follow no matter what. Rule number 1 is protect your capital at all costs. If I don't have money, I'm not going to be able to make money in the stock market. Rule number 2, define your risk before you enter. I always want to know exactly how much money I'm going to lose before I even hit the buy button. Rule number 3 is cut losses where you plan to. So if I know exactly where I'm going to stop out at, and I know exactly how much money I'm going to lose if I stop out there, once the price hits that target, I need to be stopping out no matter what. I can't hesitate. I can't think about it. It's just cut losses and get out, move on. Which takes me to my next set of rules, knowing when to walk away. So I only take maximum 3 to 5 trades per day. I'm waiting for A+ setups only. I'm not taking a bunch of random trades. Max 3 to 5 trades, and that's going to be a lot for me. I'm waiting for A+ setups only. There's no point in me putting money in a stock if I think I'm going to lose. And if I take 3 straight losses in a row, I'm done for the day. I call it quits. That's a wrap. I'm not going to sit there and keep trying to bang my head against the wall and make money. I'm just going to hang it up, come back tomorrow, and let's try again. With that being said, I also have loss limits. So here are my loss limit rules. You can see here, my daily max loss is 5%. That's 5% of my total portfolio. So if I have a $1,000 account and I lose $50 on the day, I'm done for the day, no matter if I've lost 3 trades or not. My next stop limit rule is a weekly max stop loss of 10%. So again, if I lose 10% of my total portfolio, I'm done for the week. It's time for me to step back, analyze my trade, see what I'm doing wrong, and see if I can fix it or not. The goal here is to protect your capital. You're going to walk away and live to trade another day. Here's something most traders probably don't even think about or calculate. This is my risk of ruin calculator. As you can see here, if you're risking 1% per trade, you have 69 consecutive losses before you lost half of your account. You have 230 losses before you've basically blown up and lost 90% of your account. That's a pretty safe level to be trading at, right? And then looking over here, if you're risking 10% of your account per trade, you take 7 losses, half your account's gone. And if you take 22 losses in a row, risking 10%, you might as well just call it a wrap. So I would say if you're risking 10% of your account per trade, that's more like gambling. Losing streaks are normal, guys. They're going to happen. You're going to take losses. The goal is to stay in the game long enough for your edge to work. Which brings me to position sizing. This is what most people get wrong, especially when they're a newer trader. Once you figure out how many shares you're supposed to put in for the amount of money you're willing to risk, the game completely changes. Behind me here, you'll see the simple formula that I use when I'm buying a stock. This lets me know how many shares I'm wanting to put in for the amount of money I'm willing to risk. And all it is the amount of money you're willing to risk divided by your risk per share. That's going to give you your position size. Pretty simple. So let me show you an example of what I'm talking about. This is how I calculate my position size every time, right? So if I have a $1,000 account and I'm risking 1%, 1,000 times 1% equals $10, right? So if I know I'm going to enter a stock at $2 and my risk level is $1.80, that's 20 cents, right? $2 minus $1.80 equals 20 cents of risk per share, correct? So now we just take the amount of money we're willing to risk and divide that by the risk per share, and that gives you your position size. So in this case, $10 divided by 20 cents is 50 shares, right? We have 50 shares times $2. That means we're putting $100 in this stock, but we are only risking $10 on this trade. Now every trade is controlled and I know exactly how much money I'm going to lose if the trade goes against me. All of this matters because your position size controls your emotions. Whether you believe it or not, it does. And as you can see behind me here, when you're taking small controlled size, it's easier to stay calm, follow the plan, let your winners run, and you have controlled losses. When you size in too large, you usually end up panic selling or stopping out before you even hit your stop loss just to watch it bounce and go higher. You break the plan, just like I'm talking about. You revenge trade, and you have larger drawdowns. When you're oversized in a position, it does control your decision making, whether you believe so or not. Because you're always thinking in the back of your head, man, I don't want to take this big of a loss. So how do I manage my position sizing? More rules, right? So normally I'm risking 1%. Now this is on my total portfolio, or my total account. So I'm usually risking 1% of my account per trade. On A+ setups and great markets, I'll be risking 2%. And then in choppy, not so great markets, I'm going down to 0.5%, or sometimes I'm not even trading. Here's where a lot of traders mess up on their entries. You can have a good setup and still fail, but a bad entry, you're almost guaranteed to fail every single time. Here's some entry comparisons and why entries are so important. As you can see here, these are the same charts. You got the same stop at $1, the same price target at $2. We're just getting in at $1.20 here, and we're getting in at $1.10 here. Over here, we've got a risk to reward of 4-to-1, which still is not a bad trade, right? But over here, our risk to reward is 9-to-1. That means we can lose 9 trades, win 1, and we're breaking even. Over here, lose 4 trades, win 1, you're broken even. So that 10 cents makes that much of a difference. Better entries equal better edge. How do we know if we should take a trade or not? Risk to reward, the math behind every trade. This is it, guys. Risk to reward equals your reward divided by your risk. So your reward is your price target minus your entry. Your risk is your entry minus your stop loss. A higher risk to reward means you don't have to be right as often and still be profitable. So going back to that example of earlier, we've got $1 stop here. Our entry's at 110. Our price target is $2. Our reward, right? $2 minus $1.10 equals 90 cents. Our risk, our entry, which is 110 minus $1 equals 10 cents. You divide 90 divided by 10, that gives you 9. So that's a 9-to-1 risk to reward. Again, you can lose 9 trades, win 1, and you're break even. This is how I decide whether I want to enter a trade or not. I'm using risk to reward. So is the trade worth it? We can use risk to reward to make better decisions on whether we want to buy this trade or not. So I'm usually looking for a 3-to-1 risk to reward or more, right? That's a high quality setup. Sometimes I'll take a 2-to-1, but if I'm looking at a 1-to-1 risk to reward, to me, usually the juice just isn't worth the squeeze, right? So how do you know if your trading strategy actually works or not? Well, for one, you're going to have to track your trades. But then if you're doing that, you'll just put this expected value formula in. So your win rate times your average win minus your loss rate times your average loss will give you your EV, your expected value. So basically all this is saying is if you win 4 out of 10 trades and you're making $200 per trade and you lose 6 out of those 10 trades at $100 per trade, you're still making $200 at the end of the day. So as you can see here, you're only winning 40% of the time and you're losing 60% of the time, but your wins are $200, your losses are $100, and at the end of the day, you're still making $200 out of 10 trades. This is why you don't have to be right all the time. You just have to have your risk management on point and make sure your losses are smaller than your wins. So again, if you're tracking your setups and your trades, you're going to know whether you have a losing system, like we do here. It's a 60% win rate. They're only averaging 1 R for every 2 R loss, right? So that means they're actually losing money at the end of the day, even though they're winning 60% of the time. This example here shows you why risk management is so important. You can win more than you lose and still lose. Here's an example behind me of how to make risk management work for you. You can see here, this is a winning system, and they're only winning 40% of the time, but their average win is a 2R and their average loss is a 1R. That means at the end of the day, they're making money and they're not even winning 50% of the time. That's what risk management can do for you. So if you understand how to manage risk, there's a good chance you're going to be successful in the market. So the lesson we should be learning from this video is we don't have to win every trade. We don't even have to win 50% of the time to be profitable in the stock market. All we have to do is make sure our losses are smaller than our wins. Cut losses quickly, and let our winners run. This is what most traders don't understand. It's not about being right. It's not about being wrong. It's not about getting the perfect setup. It's about managing your risk. Risk management is your edge. If this video helped you understand how to manage risk in the stock market, make sure you leave a comment and make sure you follow and subscribe to learn more. Also, make sure you go check out my trading community. I'll leave a link in my profile.